So, the last session for today, building a resilient capital and commodities market, challenges and solutions for long-term sustainability. This is going to be a very interesting session, ladies and gentlemen. Kindly be seated. The session will focus on the key aspects of challenges and opportunities, efficient market ecosystem for trading and robust market infrastructure, commodity derivatives, emerging portfolio, diversifying and risk management, currency, commodity, development of vibrant commodity markets, strengthening governance at market infrastructure institutions, how to overcome stunned growth, role of commodities in creating a developed economy. We're all set to start this session. Let me invite our moderator on stage, Mr. Mrugank Paranjbe sir, Chairman, National Council on Commodity Markets, ASSOCHAM. Can we welcome him with a round of applause, please? Thank you. We have eminent panelists joining us for this session, starting with Mr. Nilesh Shah, Group President and Managing Director, Kotak Mahindra Asset Management Company Limited. Thank you, Nilesh sir, for joining us. Next up on the panel, we have Mr. Vikram Dhawan, Fund Manager, Nippon Life India Asset Management Limited. Can we have a huge round of applause for Mr. Vikram, ladies and gentlemen? Next up, we have Mr. Kishore Narne, Director, Motilal Oswal Financial Services Limited. Round of applause, ladies and gentlemen. Next on the panel, we have Mr. Naveen Mathur, Director, Commodities and Currencies, Anand Rathi Share and Stock Brokers Limited. Round of applause. Next up on the panel, we have Mr. Rishi Nathani, Chief Business Officer, Multi-Commodity Exchange of India Limited. Can we have a round of applause, ladies and gentlemen? Next up, we have Mr. B.K. Subrawal, Past President, CPAI and Director, Vishwas Securities Limited. Round of applause. Last but not the least on the panel, we have Mr. Anuj Gupta, Head. Okay, so I think we're all set to begin the last session. I request all of you all to be seated, and I request our moderator, Mr. Mrugank, to please get started with the session. Thank you.
Thank you, and good evening, and a very warm welcome to all my co-panelists. I was jokingly saying that when you know everybody for so long and you've worked with most of them also in some capacity or the other, you're a bit hesitant which is the question you want to ask and which is the question you don't want to ask. But let me just quickly start, and I think, we started the morning session talking about how do we see the Vikasit India market in 2047. Before getting there, let's address some of the challenges. And I think both for want of time, but also so that we can make it interesting with no particular order, but I'll start with you, Nilesh. The top 2 or 3 challenges that you see in today's markets, and then we'll come to the solutions after we've heard everybody's challenges.
So, Mrugank bhai, first challenge is from the economy point of view. We are expert in scoring self goal. 10 मैच जीतेंगे और फिर फाइनल में हार जाएंगे. अच्छा सरफराज खेल रहा है तो उसको रन आउट करा देंगे. This tendency is there, and it is best explained between Singur and Sanand. Singur was the place where Tatas wanted to set up their automobile factory. 5 years they struggled, couldn't set up anything. And they moved to Sanand. In 18 months, Nano started rolling out. Nano failed, but factory prospered. So if whole of India follows Sanand model, then we don't have any problem. But we have ability to score self-goal. 10 मैच के बाद 11वीं में हार जाएंगे. So we have to ensure that there are less Singurs and more Sanand so that economy does well. From a market point of view, Mrugank bhai, we are like seeing Birbal ki kahani. So Akbar tells Birbal to make a line bigger without touching it, and he draws a line below which is smaller and the line above looks bigger. Right now, similar thing is happening to us. We are doing well, but we seem from outside doing far better because others are scoring self-goal. रशिया अच्छा भला चल रहा था, वो यूक्रेन में घुस गया. China was doing well, they found out Taiwan. Brazil was doing well, they got communist government. South Africa was doing bad and they are doing further bad. Turkey currency drops faster than you can pronounce Turkey. So because others' line are becoming smaller and smaller, our line looks better. And which is where we are getting flows, which is where we are getting domestic participation. My fear is that if others starts doing well, the premium valuation which India enjoys could narrow down for a while. But as long as we don't create more Singur and we create more of Sanand, these are all short-term temporary things. We'll overcome that and continue to go up.
Maybe somebody from this side. Vikram.
Thank you. I mean, speaking after Nilesh Bhai is very difficult because आप negative में रहने वाले हो, कितने negative में रहोगे ये नहीं पता, मतलब it's like Messi के बाद एक club player बोल रहा है. But anyway, I'll say my 2 bits. See, I'll just take a cue from what Nilesh Bhai said, and I was joking with my fellow panelist. I mean, the theme of the panel discussion is opportunities and challenges in commodity markets. So we only see challenges in commodity markets. Opportunities are yet to see it. I think it all depends upon what is the aspiration of the nation as far as commodity market is concerned. Now, if we compare ourselves to our peers, LBM में क्या है? London Bullion Market Association is nothing but an interbank market. What is LME, London Metal Exchange? It is an commodity exchange which is dominated by banks, funds, and large traders. Today, banks are completely absent in the bullion market. They are just doing agency business. Again, in MCX, I mean, Rishi will probably tell you more about it. You can see the participation. There is zero participation of banks, mutual fund, very limited. Large trading companies are also mostly doing it out Singapore and Dubai. So I think specifically if you talk about the banking sector, which is a backbone of, growing any sector of the economy, today the most difficult business to start in the country is banking. Mutual fund तो आप देख रहे हैं कितने start हो रहे हैं, this may not be the intention of Reserve Bank of India, but वो ऐसा बन गया है sector. And उसकी वजह से, there is no incentive, there is no, I don't know, how many of you sitting over here like the services of your banks? Please raise hands. Nobody. And how many feel, okay, there's one. And how many of you feel that mutual fund sahi hai? उसमें तो एक भी नहीं है शायद, anyway. Okay, एक है. So, this is where we are. And there is absolutely no incentive for the banks to come. And if you look at, I was lucky enough to be in UK that time when the banks and the funds started, participating in the commodity markets. The cost of financing, the volume, the risk management, everything went, cost went down, the liquidity went up, and the risk management also became very good. So I think if we drive our car with the handbrake on, then we can come again every year, we'll be talking of the same thing. So I think, I'm a bit, since I'm an affected party, I may be a bit negative on it, but this is a fact that I would like to present.
Since my other panelists are more on the distribution side, and of course Rishi is half a regulator, but I'll ask both Naveen and Kishore, and I know we spoke more on capital markets in the morning, so maybe our discussion is going to be a little bit more on commodity markets now. Where do you see your challenges, especially when it comes to really getting participation in this market today?
Thank you. I actually have a very different opinion on the regulatory front. If you look at the global markets, again, primarily we all look at US for all the cues which how a developed markets should function. Though volume-wise, participation-wise, we are much larger than many of the markets there, but as maturity-wise, we are still not that. So if you see the regulation in US, it's regulated in two different verticalization, which is SEA and CFTC. That's SEA regulates the cash market of the financial securities, and CFTC regulates the derivative market. And there are no categorization after that actually. All the derivatives are into one bucket, right? It could be equity derivatives, index derivatives, weather, commodities, currencies, all derivatives, because derivative regulation, the moment you get into that asset, it's a derivatives, it's not an asset anymore. It should be regulated on the risk management basis as the margins are there, proper collection of collaterals is happening, proper payouts are happening, settlement is happening. The asset side, which is the cash market side, is the regulation is completely different, because you need to see whether there is insider trading is happening, cornering of the market is happening, manipulation of price is happening, all those that's a completely different regulation. So in India, the buckets are so many buckets. That actually leads to so much difference of treatment of each bucket, so much difference in regulation, and so much of confusion. Yes, I agree with Vikram also. On the policy level, at the government level also, there should be more clarity on how they should be approaching these commodity markets, and how can make it as part of national building, etc. But that's just a superficial level. Critically, if you just put this into one bucket, all derivatives are same, all are speculative in nature, all are there. The customers who are accessing this market, they know exactly what they are getting into, what kind of risk they are taking up, and what kind of leverages they are taking up. If that approach comes and the regulation is divided into two different things, I think all the markets in India will become into mammoth size because of the participation. China also does the same actually, to be frank. So I think that approach will actually give much more clarity of regulation as well as the ability to grow.
Thank you for this discussion. I'll tell you, I've been part of the commodities derivative space since inception, and inception means 2003. We are sitting today post 2 decades. There have always been, when we started the journey on the commodity derivatives, there was an ask from the participants that we should have much more products. We also should have much more participation by virtue of having different institutions, clients, retail customers, etc., etc. I totally agree with what Mr. Nilesh Shah and Mr. Vikram Dhawan has said. We work very closely with institutions. We work very closely with retail participants as an intermediary. And I would say that to kind of an that Kishore would agree with me, that since we've been talking about commodity derivatives on 2004 till date, we've been speaking a couple of same things again and again. We've asked for products. The regulator has given us the products, just not the futures, but the options too, which make the derivative markets per se full. We asked for the participants. We used to trade, or I would say, retail participants or the corporate participants who have an underlying exposure were allowed to participate in the commodity derivatives earlier. But today we have much larger participation structure, which includes the AIFs too, which were allowed in 2017, I remember. We have the AMCs also, which can participate on the commodity derivatives, subject to their limitations as per the regulation of the SEBI. And we also have the FPIs who are now allowed to participate in commodity derivatives. So as far as the basket of the participants is concerned, the product or the derivative is concerned, we are done with. at the end of the day, what happens is that why these participants are not coming. They're not coming for a couple of reasons. And one of the most critical reason is that they look forward for a long-term, means they want to participate in the long-dated contracts. And unfortunately, let me say this, I'm putting a disclaimer here, that in any of the conferences since 2004 I have been part of, I have been a very strong advocate of saying it that we should have liquidity in the far-dated contracts. Means then the corporates who have a long-dated exposures should come in and participate. International markets, as Vikramji rightly said, and Kishore also said it, in the markets like US and other developed places, you have around 80% of the institutions, or the commercials as they say, they participate for their hedging purposes because of the price risk on the commodities side, which doesn't happen in India. See, 5 to 10% of the people do the hedging. So what I'm trying to say is that the liquidity on the far-dated contracts, the interest of the participants, which actually means something to the commodity markets and to derivatives, would definitely come once we have that kind of space available. Otherwise, we would only be doing trading in the current month or the near month contracts, and nothing would serve the purpose per se. The second thing, Mrugang sir, just a second of it, the spot future integration on the agri side. We had the very opaque structure on the agri. That's why the agri derivatives didn't pick up in India. In spite that we are one of the largest on various agricultural commodities, various agricultural commodity producers and consumers can come in and hedge their exposures on the commodities which are listed. We don't have anything left out for the agri markets for one reason or the other. So I would say that two things, the liquidity on the far-dated contracts, education, and at the same time, I would say the crux of the commercials coming in would help people to realize the benefits on the commodity derivatives. That would be the only thing which I have to say. Thank you.
Sure. So Rishi, since everybody's going to look to you for answers, but we also want to know your problems. But before I come to you, let me ask Sabharwal Sahab, where do you see the key concerns today when it comes to commodity derivatives in terms of participation?
Commodity derivatives concerns are very well known for last many years. We have commodity experts sitting as the co-panelists, you being the MD, and then Rishi Nathani ji from the exchange, Naveen Mathur right from 2003 exchange as well as that, and Kishore Narne being known as the expert of that. And I take this opportunity when a member of the Prime Minister Economic Advisory Council is there with us, so why not to put forward those points that, as sir, all of you are aware of that worldwide, the volume in the commodity markets are 10 times of the capital market. While in our country, these volumes are 1/100th of what the capital market, if we count the options, that is premium, they count it premium also as not only the premium, but so the requirement here is that commodity scene, there are political reasons also, sir. One, the main reason is that the cost of transaction is very high in this country. Worldwide on commodities, there is nowhere transaction tax except in this country. And that too, the transaction tax is equivalent to that of the capital market. So the one first requirement is rationalization of the transaction tax. Even if twice it has happened that Finance Ministry assured us that transaction tax will be reduced. But again, for some reason or other, though the revenues on that account is almost negligible. If today the transaction cost is reduced by 50%, the net revenue, the net exchequer to the government will be 5 times more because of the various other things, that amount of volumes which will increase, which will generate the stamp duty for the government, the GST for the government, or even income tax for the government. So this is the one aspect. Second is, sir, that the confidence is decreasing because of various political compulsions. Many commodities are banned, and that too are banned unabruptly. 7 commodities were banned 1.5 years ago, 2.5 years ago, and no justification even up to today. The fact remains that it is the best price discovery mechanism. Today, there are many more problems, Murgan, if you allow me for 2 more minutes. If I talk from the agri-commodity point of view, the confidence once gets shattered when the commodities get banned. Some of the political opposition party feels that price rises because of that, but what we have felt that any commodity which is banned, the price have, on the contrary, increased only when it was in the trading. So the requirement is that government should re-look at it from the total world point of view, that why these volumes are more in other countries and why it cannot be come in this country also. I'm not talking of the non-agri commodities also. Even the PSUs are hedging their commodities on the international exchange and not here. They say that liquidity is not there. And that's why the PSUs like IOC, BPCL, HPCL, Vedanta, they are also hedging their product in the international. So the requirement is that why not we make it compulsory for them to trade, and government should look on that account, that where is the need that the volumes can come back into the commodities market.
Sir,
So-
1 minute.
Yeah.
So I would like to ask you a question, because you're representing Association of Chamber of Commerce. So is there any company in the country comes to the SHM or FICCI or CII and say that I want this commodity market, without this I can't survive?
So again, and I think we'll talk about this collectively. I don't think we have raised the education levels and the
I don't
interest
think
levels.
we still become that
yeah,
essential
correct.
of these
So I think
corporates.
the number of people who really feel bad when a commodity gets banned is abysmally low as compared to what we all at least think the need is. But yeah, Rishi, exchange-wise, where do you see your challenges in the commodity derivatives market?
See, challenges are a lot, sir. But I just like to give a different perspective. And I have been in the entire capital market since a very young age. From age of 18, I'm in the equity markets, from 92. And I've seen equity markets till 2014. And commodity markets since inception. So I just know one thing. And Nilesh Bhai is next to me, so he is known for his wise comments. So thoda sa rub off ho jata hai. So there's a difference between a 30-year-old child and a 20-year-old child. So the regulator, equity markets are 30-year-old. So regulator will treat them differently. And commodities are just coming of age. So I am not all about gloom and doom. I believe that we have reached far better than we could have. But of course, we can do much better. And going forward, we also have to understand one more thing, which most people tend to ignore, is that in any developed market, first institutions come, then retail comes. Commodities, we have worked the other way around, because institutions have been allowed at a much later stage. So institutions, once they start getting some kind of mass and scale, then it will be very difficult to ignore commodity markets. So whether it be mutual funds or AIFs or corporates, once they get the habit of, अब मोदी जी ने एक बात बोला कि इंडिया में शादी करो, तो लोग इंडिया में शादी करने लग रहे. 2016 RBI said that you cannot hedge gold abroad. So everyone started hedging in India. So like Sabharwal ji said, कोई एक mandate आ जाए या कोई एक soft push भी आए कि Indian corporates need to hedge at least some portion of their production or exposure in India. So that will go a long way. But we cannot just wait and hope that the government will take action or something like that. We have to be proactive on our own, which we are trying to do. And we have come a long way, and I believe now that we are at a certain inflection point, or like that book Tipping Point, that commodity markets now will have geometric growth, not arithmetic growth.
I hope so. I think, changing tack, and Nilesh bhai, I'm going to come to you in the end because there is a little expectation given your second hat that we will have. So we'll collate a little bit of what people want and we'd like to hear your comments in the end. So if I was to just ask, saying, where do you see that one big opportunity and where is your big ask so that we can come to Nilesh bhai at the end?
Yeah, sure, absolutely. So I think, one of the reasons why the commodity sector is so developed in Africa, Latin America, I mean, obviously we know about North America and Europe, is because obviously the funding by the, conglomerates from the US and all, which invested money, and even Gulf also, we don't, not many people know 1950s US went there. But the main advantage was the banks will only lend you big money if you have a foolproof risk management policy, which means you're hedging. So each country had a choice. Either we go to the holy grail of commodities, LBMA and LME to hedge, or we develop our own commodity markets, which are world class. So I think today, one of the reasons the commodity market, we are undershooting in the commodity. I mean, we are more, what is the difference between us and Dubai or Singapore, which have become like the, or London for that matter, or New York? What's the difference? Because, it's very clear, either they have their domestic markets, which are world class, or they are hedging or they are trading in exchanges or in markets which are not domestic but overseas. So I think we need to take a call that either open the overseas market for everybody, or if you don't want to open the overseas market, then you have to be world class. Otherwise, all the traders will shift to Dubai. Eventually, if you don't allow mutual funds to, launch commodity specific products, so then you'll have some overseas person coming and launching a product overseas and take your money and all those things. So I think this is a very radical thing at the policy level, which we have to see, that whether it is it an important thing in the scheme of things as far as the nation building is concerned. So that's my take on that.
Sir, I think, again, I'll mention that Rishi's analogy of 20-year child and 30-year child kind of. I don't think you should look at that perspective, because these are businesses. If you do invent a business or a process, the second one does not need to wait the same learning curve. You have learned somewhere else. You should be able to easily replicate it, and you cut down that learning curve. You cannot really have the same amount of growth. But at the same time, as Vikram also said, I come back to my own proposition that today we are not relevant for the businesses in India, because maybe one of the reasons could be that they have evolved the ways and methods of doing business without actually having commodity markets, because we have not been there for so long. And I know one of the customer used to be long back when I used to, in my previous organization, we went to a paint manufacturer, and paint manufacturers use soybean oil, castor oil in their paints. So we said, how are you hedging and all those things? So that time NCDX was very vibrant. So he said, I have supplier who supplies, I don't know what he does. He goes to them, he says, I have farmers who are giving me my castor at fixed price. I have done my. So this is like a water which finds the path of least resistance. The businesses will not stop. So most of the times they found their paths. The bullion, the jewelry guys, nobody comes to MCX for hedging, because they have evolved the methods of hedging. Day to day, शाम को मैं जो भी आज सुबह बेचता हूँ मैं शाम को खरीद लेता हूँ, मेरे पास तो कोई रिस्क है ही नहीं है, right? Only thing is now inventory, right? Inventory तो मेरा बाप दादे का जमाने का गोल्ड है, मेरे को hedge करना नहीं है, right? Cash flow कैसे manage करूँ? So we have not solved the basic problems. If the buyer doesn't want a product, मैं जबरदस्ती गवर्नमेंट को बोलूँ नहीं नहीं मेरा प्रोडक्ट खरीदना ही चाहिए, I don't think that energy will stick, right? This is not a medicine that you have to prescribe to somebody to take it, because these are all private limited companies, profit oriented companies, they know what to do better, right? So until unless we make ourselves suitable enough for the buyer to come and require our services, we will not really able to compete in that. Because as Vikram said, people today, Dubai or any of these free zones and all those markets which evolved, they never said that by regulation you have to come and do that. Right? They made the markets efficient, everyone just falls in line, the kind of thing. So we have to become that efficient. Again, as Naveen said, yes, we have to create long dated contracts, viable or liquid, but how? Today retail will not go. Even equity, we don't have long dated liquidity. So how can we get here? Because ours is predominantly retail driven markets. So these are questions. We have been asking these questions, but there are no answers.
Okay, so Rishi, since we have worked both together on the exchange and the intermediary side, I can only say what Kishore said, and I reiterate my point, what I said earlier. How can we work together as an exchange and intermediary to ensure that we have the liquidity in the far-dated contracts? If that happens, honestly saying, Rishi, I'm talking to FPIs, means let me put it across. There are 14, 15 FPIs who are interested on commodity derivatives, and they want to work in commodity derivatives. But for them, just the current or the immediate contract would not be an option. Don't think that I'm cornering the exchange or you in any way, but it's just that question that both of us together, how can we work and ensure in terms of building up a case for the people, as Kishore said, a relevance to the commodity derivatives.
And Rishi, I know he said, but I am going to pick on you. Because this is a question which I think is lingering in the mind, is that we keep talking about government support. In the history of commodity derivatives that I've seen, if the only place we have received support is the 2018 1st July circular of RBI, which said you are not permitted to hedge bullion outside India. And as all of us saw, the open interest went from what it was to a multifold, right? So what do you think needs to be done to now do the next step, right? We have got one step done. Liquidity, everybody says you need open interest. The second step, as everybody is saying, is long-dated contracts. How can we get long-dated contracts? And let's just talk about, what we should be doing, what you think are we doing on this side.
Yeah, so as I said earlier, we are facing the dichotomy of a market which is growing in the reverse direction, in the sense that you're graduating from retail to institution, and institution is very nascent in this market. As institutional participation builds up and you get more and more institutions coming into this market, you will see that the liquidity and depth of this market is growing. Right now, maybe for Nilesh Bhai, it is not even worth his analyst's salary to look at commodities, maybe. Naturally, everything has some economics, and he's also running a profitable organization. Vikram is also running one. So for them, commodities, the day it gets that kind of mass, or that if Vikram is doing and Nilesh Bhai is not doing, or Nilesh Bhai is doing and Vikram is not doing, then they'll be forced to play catch up with each other. So that is the day we are looking forward to, where we will get more institutional participation. When I say institutional, I do not only mean mutual fund or AIF PMS, I mean corporate also. And we have grown despite the government, not due to the government, right? And I believe that if we are strong enough, and I feel, and this is my personal view, is that if we are better in advocacy, if we are better in getting our voice heard, I think much more can be done. Because jo dikhta hai, wahi bikta hai.
So on that count, Nilesh Bhai, I'm going to ask two questions to you. One is the broader one as to what this entire community should be doing. But a smaller one is when people say, exactly like he said, we were in a platform where we were working closely with ONDC. And when we had our first discussions with ONDC, they were very categoric in telling us that it is not our priority to work on agricultural commodities. As a government and as a community, we think there are better priorities to work on. Within 15 days, the tomato crisis happened, and 80,000 tons of tomatoes were sourced, procured, sold, distributed on the ONDC platform. So at the end of the day, if there is a pain point, I think even government and policymakers will listen and do something about it. So, bigger question, 10 years down the line, where has the community, and I say the community means brokers, participants, exchanges, everybody, where have we not been able to engage the right sort of way of thinking with the policymakers? Because everybody blames the policy, but I also don't think policymakers would not listen to you if you were so rational and you were addressing a pain point of theirs. So where do you see the disconnect? Because you now have a slightly different view at the level that you're sitting. And then second, where do you think this industry should be doing? Because the lovely thing which I keep saying is I meet the same panelists every year, and I don't want to ask the same question every year. So can we ask a better question next year? But on those counts, for you on these 2 points.
So in one of the meeting at Niti Aayog, Prime Minister had mentioned that you have to be persistent with the government. Just because you have given a great suggestion doesn't mean that it will be accepted. You have to create multi-stake ownership. You have to be persistent because government is 1,000 priority. And they don't have bandwidth to manage 1,000 things at the same point of time. So you have to keep on hitting, and eventually things work out. If crisis is there, then it will happen faster. If crisis is not there, then it will happen slower. One thing which as an industry we should have done is to show the might of India in the past and how in commodities market we were king. So there was this American family, Hunt brothers. They were the richest family in America, or top 3 richest family in America, and they wanted to become more richer. So after all the analysis, they found that if we start cornering silver, silver prices will shoot up and will become even richer. They went, cornered silver, pledged that with bank, took more loan, bought more silver, pulled the prices about 7 times higher. And as they were running this operation, they realized that from Middle East, silver is coming. Now in Middle East, there is no silver mine, there is no silver refinery, but supply aata gaya. Finally, their ability to corner came down and the silver prices crashed, and the fall was much, much faster than rise because margin calls were being made. Much later, Hunt brothers realized that silver was actually coming from India. जब silver prices आसमान को छूने लगा, तो we melted our silver utensils, probably some other things also, and supplied it to Middle East. And from Middle East, Hunt brothers was brought down. Now, how many of the Indians know that Indians collectively brought down the Hunt brothers family? The Hunt brothers know. I met one of their descendants in Chennai some time back, and he remembered that you are the people who destroyed our family. But how many of us know about it? This, Mrugang Bhai, I don't know, but I have heard about it. There was a gentleman called Seth Maganlal in Mumbai. He was working in Javeri Bazaar. And he used to trade big time on Chicago Mercantile Exchange. So one of the foreign newspaper reporter came to Javeri Bazaar to meet him. After a while, a person came, thoda jadu badu laga ke otla jo bolte usko saaf kiya, and then opened the door. And then this guy said ki bhai, I want to meet Seth Maganlal. Ruk ek minute. Went inside, changed the cloth and said, come, I am Seth Maganlal, what can I do for you? The Chicago Mercantile Exchange wanted to ring the bell, जो हम लोग NSC, BSc में घंटी बजाते हैं, वैसा with Seth Maganlal prior to independence. Now, have we told these stories that there was this Seth Maganlal who rang the bell on Chicago Exchange? Now, this I have heard, I haven't, verified. But Hunt brothers, I met that person, that descendant gave debit to us, but we are not willing to take credit. Unless until you remind the policymakers that this was India pre-independence, post-independence, and why should our silver go to Middle East? Why can't we dump it to Hunt brothers in India? In gold, silver, Kishore bhai, we are the market leaders. And today also via Dubai and via Javeri Bazaar terminals, we are setting prices there. We are not doing it over here. In mutual fund, the gold prices have to be LBMA prices for valuation, not MCX price. Why? Where is Atmanirbhar Bharat here? Can we not trust our own exchange? So there is a mindset which we have to change. We'll have to be persistent. We'll have to provide solutions. We also have to ensure that national spot exchange kind of things doesn't occur, which then creates deficit between investors, lenders, brokers, speculators, exchanges, regulators. So I think like, Bombay Stock Exchange, Wild West got converted into much more disciplined trading. Jota Fatak, Patawat, Vandho, Garo, settlement crisis, payment crisis, all those words have become history. We need to do that in commodity markets.
Thanks, Nilesh bhai.
So I think I'll just add.
After Vikram, we will open up for questions, and then I'll take one last round from everybody.
Sure. So I think we all know, what mutual funds have done to the equity market, provide the, the stability and so many other things. And I mean, Nilesh bhai is the superstar of it. If you talk about commodities, I mean, apologies, doing a bit of sales talks of Nippon. But, we started our gold and silver fund. Gold fund was in 2007 and silver in 2022. And today our gold fund is 10th largest in the world and silver is 9th largest in the world. Despite we are not able to take overseas. So you can imagine that, despite or in spite so many restrictions, there are so many stories and we are just one of them. There are so many traders which are one of the largest traders sitting in India doing gold and silver. So I think there is no dearth of intent or talent or, the success. It is just a question of shifting your mindset that do we want to dominate this space or not? And the main reason for dominating the space is, and I think Nilesh bhai is a better judge of that before NSC and before mutual fund, the cost of securities in capital market used to be 30%, the badla. Now, I think the best arbitrage fund is 5.5%, 6%. Similarly, if you allow flow of capital, where is the money nested? Money is nested with banks and mutual fund. If you allow the flow of money in an orderly way into the commodity markets, the cost of capital will go from 24% to 5-6%, which will be a game changer for Indian farmers, Indian traders, and Indian producers.
I will just like to mention one thing, sir, that you talked about the meeting in the Niti Aayog, so I could remember one thing which happened there 2-3 years back. Today we are in the midst of the farmers' agitation. Last time when these farmers' farm bills had come and we used to have meetings in Niti Aayog, Mr. Ramesh Chan, who is basically otherwise an agricultural expert, a study was done, sir. That study can be re-looked. My colleagues who are there on the exchange or on the tradings also, a thought was that if the exchange traded option can be a replacement to the MSP. Probably Murganji was also a part of that committee. And the cost, the government can subsidize or fund the options. The cost to the government will be 1/5 to 1/7 of what is being given in the MSP.
Yeah.
So this is also one of the thought which especially in the midst of the farmer agitation we can think of. And before, though we are more on the commodity, but I being a part of capital market and taking the privilege of your being sitting, I have one more suggestion to make for the government, and that is to encourage the capital markets to go up in this country, is that as the Jan Dhan accounts were opened, why not we open even the demat accounts of the, we educate the people also. And though the demat account, we know that it has gone up from 4 crores to 11 crores, but there is a good scope of going it up to 30 crores or 40 crores. So even this thought can be there, that why not we open demat accounts of the people. And similar thought can come for the commodity also. Today we have 7,500 FPO registered with us. And out of these 7,500, even 200 FPOs are not actively participating in the markets. So thoughts can be there, but we have ideas, but not here, that how even the FPO participation can be increased, especially in the Indian markets.
Can we just open up for a few questions and then I'll have one minute. Yeah, somebody there.
To address a couple of issues and also Nilesh to respond, because you have been interacting with the government on building a great infrastructure for the Indian market, and also Rishi can also supplement and anybody else. Now SEBI has said we should have multiple exchanges, at least 3 exchanges for competition. One is your NSE, BSE, and of course, MCX is there and MSCI. MSCI was the leader in Forex. And there was a legal case where MSCI won the case against NSE. 900 crores was awarded by the High Court along with interest. It's, I think, over 10 years. Interest will be 1,000 crores
Sir,
plus.
can you just come to your question quickly? Yeah.
Now, MSCI people are also here. Because of this, NSE listing is delayed. SEBI has said one should resolve all litigation. And what is your thought process on this litigation impacting efficiency of markets and very limited competition among exchanges with some dominant player becoming very dominant? And you are quite aware of these exchanges. Your thought process, Nilesh and Rishi and anybody else, I feel this is very vital for the India growth story. Thank you very much for the opportunity.
So I think at the sound of sounding a bit contrarian, I have never subscribed to the policy of having multiple exchanges. For an economy of the size of the US, they have lesser exchanges than India, and many other economies that are still larger than India, we don't have as many exchanges. So I don't subscribe to the theory that when it comes to market infrastructure, you need competition necessarily. And I think collaboratively, you can do much better. In fact, personally, I believe that the experiment being done in the GIFT City, where all the exchanges together are collaborating to create what I believe is a very good infrastructure there as well, is a good move. So, you know, to your point, just my view that I don't really believe in creating multiple pools of liquidity, because we are not able to get liquidity in one exchange, and I don't see why we need many more. That's my view, but would be happy to hear from the others.
Well, see, it's no point everyone doing the same thing. So I agree with Mrugant, sir, that everyone doing the same thing doesn't help. But if you have your own niche or your specialization and you're working towards that, because there's more than enough to be done in a growing country like India. So like, for example, we are doing commodities, someone's doing equities. Now we can champion the cause of commodities. So yes, of course, there is a lot of scope to grow that.
Yeah. My question, I think, Kishore, you said we'll have to create relevance, isn't it? That why commodity market? Why should people come and do? Equity is okay. Those corporates are working, manufacturing or delivering services, and they are growing. That is why we are putting the money into their equity, and we are also growing. To a great extent, speculation, that is a part of the price discovery, they say, in the equity market. Now, in case of commodity, you yourself said, why the commodity market is relevant, number one. To whom is it relevant? And why the other people to whom it is not relevant should be forced to come in the commodity market? There are enough for speculators in the equity market, F&O. So I don't understand the logic only that commodity is a specialized, particular product, whether it is an agri product or the metal, or whatever the gas or something. Why everybody should come and play in the commodity market just for the sake of playing? Or is it going to serve some purpose?
Sir, why commodities, as far as speculation is concerned, it's very well addressed. For speculators, why not? Why not is the question, right? For speculators, he needs anything which is price, which is moving. It could be anything, horse races to any markets, right? Speculation के लिए कोई doubt नहीं है. My thing was that the users in equity market, who are the users? The corporation which needs capital has to come to equity market, list itself so that they can raise money. That's the need. We are serving a need. Then the secondary market comes into play.
That's only my
The
question.
primary market of commodities is the actual manufacturers, users, traders, right? आज आप वाशी का मंडी में जाएंगे and then ask any of the wholesaler कि भाई without NCDEX can you survive? Yes, he can survive. He is surviving, right? So at the end of the day, our contracts, our exchanges, and our regulators, all the three has to combinedly together create an environment where the likes of, I was talking to Vikram, where the likes of Sterlite or Hindalco should come and tell the government, sir, without this my business is becoming difficult, so this is my pain area, I am not able to hedge, I am not able to raise money, I am not able to finance my commodity, I am not able to finance my raw material, without this my business is becoming difficult, then the government will address that problem through the exchange. Today, we don't have that. I'm not saying we cannot have that. We can have that. Even in agricultural commodities, if the government comes out to the public and say, I'm not going to touch you, let it behave the way, I'm only going to see whether it is a malpractice or a manipulation is happening, I'm going to take action. Otherwise, I'm going to leave you free and fair as far as price discovery is concerned. If the government says that, agriculture markets can again revive back. There is enough need, I am not saying. The exchanges and policy and contracts, all the three have not successfully made it relevant at this point of time.
But you also said that the retail participation is more these days, institutional participation is not much. So that retail, what for that retail is coming in this
Sir,
market?
I'll just ask a question. How many people in equity markets are investors vis-a-vis your volumes and derivatives?
I agree.
Just
if you are talking only about
no,
speculation,
so,
then
just
it's
let me
okay.
complete, sir. Just let me complete. So just casting an aspersion on commodity markets, end of the day, commodity markets, like Kishore said, in equity markets, there are only two types of participants. Corporates who need to raise capital and investors who want to give that capital. In commodity markets, you have exporters, importers, producers, manufacturers, farmers, adatiyas, you have the whole shebang. So you have a large number of interested parties. The number of stakeholders in commodity markets are far, far more. The only point we were making is that to get that inclusion within the commodity markets. Now, it is a fact whether it be any markets, right? So the derivatives are there, are larger, but that doesn't make commodity markets any worse. Rather, they serve an economic purpose.
Ajmera sir, we can discuss it post this
I'm
call,
not saying worse or
but there
this
is a relevance for the value
I'm not
chain
putting any
participant.
aspirations or this. I'm just
Sure. So can I just, because we want to move towards the closure quickly. My point here is very simple, sir. People, if today your equity market shut down, people who need to raise capital will raise a hue and cry. That is the real thing, right? And that is exactly what Kishore was saying, is that while our commodity markets haven't taken off, what is really not so great is that neither the consumer, nor the manufacturer, nor anybody else is still getting concerned that this market is not developed. So I think it's a joint issue, and I don't think anybody's... so here's one thing which I want to end at, and I'm doing it more specifically because I think it's very nice to say कि उसने नहीं किया, correct? I am going to start with something which I pledge I will do because I've been hosting this session generally for the last couple of years. So maybe ASSOCHAM will find कि यार ये एक आदमी मिल जाता है तो इसको next year भी बुलाएंगे. Okay. But if I come next year, I don't want to be asking the same questions. So here is one thing which I want to say I will do, and I want each one of you to say that one thing which you think you will do, so that maybe next year we're discussing something different in this commodity session. So my take, Nilesh bhai, is that to the extent I know people, to the extent I know people like you, to the extent I know policymakers, I will try and spend as much time as I can in the next 1 year to make sure that people understand both sides and we can make this market more productive. That is the time commitment I'm happy to give, and happy to take the commitments from all of the others, because then we'll ask Nilesh bhai to make 2 promises. One, what he will do, but what he will also see if he can make some other people do for us.
Just one thing I'd like to add, sorry. I mean, not many of us have the privilege of meeting the Prime Minister, and I think the message is very clear, which is conveyed by Nilesh bhai, that persistent. So I think somehow we become very complacent and cynical कि ये तो होने वाला ही नहीं है. अगर वो approach को हटा के we become persistent and keep trying, you know, whatever is the agenda. I think that is the key takeaway for as far as I am concerned.
Now one request to the chair, since Nilesh bhai is here, something about equity and capital
We'll
market.
come to that. We'll come to that in the end.
We would like to hear from
Sure,
him.
Sure. Your one commitment, Kishore, for the year on the commodities side.
Sir, I've been working with the regulators for quite long time, and I'm actually on the, as Naveen was saying, that FPIs are entering. Everyone needs liquidity and all those things. I think we all are working in intermediate, especially the broker side. We are all working on 2 aspects. One is on the regulatory front to clear up and make the demands and what are the needed, because this is a still half-made puzzle. A lot of issues from GST to
Nilesh, what will you do in the next 1 year?
So regulatory, we are representing and we are trying to do as much as possible. And on the customer education, that's a critical role which we play. And I've been doing a lot of work with Rishi, more than 300 programs we do every year with multiple exchanges and all. So we'll continue to do that. So we cover around 38,000, 35,000 customers in a year on customer education for commodities itself.
We'll work with Rishi to ensure that, that whatever we can do to bring these participants onto board of the exchange, that's my pledge. I will ensure the participation.
Sir, the need of the hour is that who think, taking this opportunity that you are sitting here, need of the hour is that how many people in the country today are knowing this? Matlab, a veteran of the capital market, Ashok Ajmera ji, is saying that when capital market is there, the need of the commodity market. I'm saying the veteran of the capital market. So today, education is also required. And Kishore was very right that I know him that they are working on it for last many years. Our Indian farmers may not be literate from the point of view that they are 10th passed or 12th passed or graduate. But if this literacy of commodity is imparted to the lower level, which was done about 7-8 years back, and we have found that there were good results. So, any individual understand what is his basic requirement or his family's basic requirement.
सरवाल जी, आपका कमिटमेंट की बात चल रही है, ये तो आप सब किसी और को करना है. What is your commitment for the next 1 year?
Sir, next 1 year we will try to have more educative programs, not only from the associations, but even NISM has very recently agreed that it will be going for the programs. And very recently, even government is thinking on that line, that it is not only the word investor education. Investor education has become a redundant word today. Today, the actual education to the, as Vaishnaji started with today, was that we are not only the regulator, but our basic is that educating the people and developing the market Same thing is to be done at all levels. This education is to be imparted in the country, and that too in the regional languages.
Rishi, next 1 year.
Just two
6-month
things.
contract liquid.
Just two things, more awareness, better advocacy.
So I think Nilesh, lot of expectations from you, as you would have also expected. So one final takeaway is both from a commodities market perspective, but people will feel very, very left out if they don't hear from you on the equities market. So you'll have to have a little bit on both before we close.
So I'll commit to be a squirrel. So there's this story in Ramayana where Ram Bhagwan is trying to build Setu to Sri Lanka, and all the big monkeys and bhalus are putting big boulders, and there is a small squirrels which are trying to put small pebbles, and then the monkeys go and complain to Bhagwan Ram that ye squirrels aake problem kar rahi hai, we may end up hurting them. And Bhagwan Ram says that squirrel is also important. They are doing as per their capability. You are moving big boulders, they are moving small pebbles, but together the bridge will be built. तो अपने squirrel का काम करेंगे, गिलहरी का काम करेंगे.
And finally, something for the equity markets.
So long term, I think we don't have to debate. It's almost as if there is a divine intervention on India. I mean, imagine, Rogank, if you had inside information that Israel-Hamas war will be on, Russia-Ukraine will be on, Red Sea will be disturbed, and Saudi and Russia both will cut about 2 million barrel each oil production. All of us would have estimated 100, 125 oil. Bhagwan bola tathastu, and it is at 75, 80. This is divine. Till 2 months back, US Fed was higher for longer. Ab suddenly wo U-turn मार के बोल रहा है नहीं, we can look to cut. This is again divine. Till Karnataka election, we were worried about kya hoga. Now after Rajasthan, Chhattisgarh, Madhya Pradesh, we are saying ab ki bar 400 par. This is divine. You look at growth, we were 6% handle and we come at 7%. Next year also we will be 7%. So there is some sort of divinity coming to India where our line is becoming bigger and bigger and brighter, and others' line is becoming smaller and smaller. So we have to pray that this divinity continues. Apna gaadi अच्छा चलेगा, but we have to ensure that सामने वाले का गाड़ी भी गिरता रहे. And the final thing, I think there is a real transformation of India. If you remember in Panchtantra, there was this story about 2 cats and a monkey. The cats found a piece of bread and go to monkey, and then monkey ate away the entire thing. We were normally the cats in the global arena. We were happily buying oil from Iran at discounted price. रूपी में खरीदता था, यूको बैंक में पैसा रखता था, 6 महीने का क्रेडिट देता था. And then we stopped buying cheaper rupee-based Iranian oil because US put sanction on them. तो हमारी ब्रेड अमेरिकन मंकी खा के चला गया. Now look at the situation. America put sanction on Russia, we continue to buy oil from them. And then we go to America and say कि बस वो jet engine बनाने का भी technology जरा देगा क्या? So this transition of monkey to cat to monkey, that is भगवान का ही आशीर्वाद. तो जाको राखे साईं या मार सके ना कोई. थोड़ा बहुत मार पड़ेगा इक्विटी में, but stay invested. भगवान साथ में है.
On that very positive note, thank you Nilesh Bhai. And like I said to all of us, each one of us has a role to play so that next year when we meet again, as we are concluding today's conference, we discuss something much better and much more positive. But thank you panelists, and thank you for making this interesting. Thanks.
Thank you so much, gentlemen. Can we have a huge, huge round of applause for this wonderful session? That was indeed a great panel discussion. Ladies and gentlemen, thank you so much for being here. It has been a great summit, the 15th Capital Market Summit by ASSOCHAM. Thank you so much to all the panelists, and thank you to the audience who's still here and who's enjoyed the session, who's participated. Thank you so much. With this, we come to the end of the 15th Capital Market Summit. My name is Rishika, and we are wrapping up the summit. Thank you so much.